You're welcome to the day one of this Forex Trading Masterclass with Ogechi Victoria. As a newbie to Forex trading, looking at the chart or these candlesticks may appear very difficult to understand, especially if you simply want to learn how to place trade analytically instead of trading Forex as if it is a bet or try your luck. I was once confused as well, but now I earn thousands of dollars from the Forex market. So in this day one of this Forex trading course, you will learn how to analyze charts, when to buy, when to sell, and when to hold on, when not to do anything. Before we open the chart or board, you should understand that Forex trading is not betting, and it is not try your luck. You don't hope to get profit in Forex trading. It is something that you should already know what exactly you need to do before you even place your very first trade. Here is a simple explanation to kill all your misconception about what the meaning of Forex trading is. When you have Japanese yen, Ghana cedis, or any currency at all you have, and then you walk to one aboki or Bureau de change or anywhere around you that they told you that you can change that money you have to get dollar or pounds or any other currency. The moment you exchange that money you have for any other country's currency, you just did what is called Forex trading. The only difference between the exchange you just did is that you went to a physical location to look for an individual or company or office to exchange money for money. But this one we are doing right here is that with our phone or laptop, we are buying or selling the same different currencies of different countries at the comfort of our home or office or wherever you are. Alright, that's just the difference. And now, whichever one you are doing, whether you are buying or selling, it is actually with the intention of making profit. Before you can make profit in the Forex market, you must understand when to buy, when to sell, when to hold on, unless you will keep on losing money. Let us start with when to buy. And now for us to start with when to buy, we are not just going to be sitting here and talking. We have to go to the screen so that you see the chart and understand when to buy and when to sell and when to do nothing. Right now, I'll start by holding a marker. So the moment we open the chart right now, you're going to be seeing green candles. You will also be seeing red candles. Now, the green candles, most people tell you that it means profit. And most people tell you that the red candle means loss, okay? Yeah, so now you need to understand that whether the candle is green or red, you can still be making profit. So, and also, the colors of the candle, red or green that you see, is set by default. You can actually change the color. So, the color of the candle doesn't truly matter, okay? Now, let's see what matters by starting with the number 1, which is when to buy. Let me head to the whiteboard, okay? Okay, so here we are on the whiteboard. And now we are talking about when to buy. Did that clean up? Okay, you can see it's a buy. And now, to buy means you just open your chart and you're seeing candles moving up and down. And now, you're saying that at this point, now the moment you place a buy here, what you're simply saying is that this market will keep going above this level that you placed a buy. And if the price goes above this level, that means you just made profit, okay? But if the price goes below this level, then you have a loss, okay? So now we want to know the right time for you to place a buy so that you will make profit. Now, the right time to place a buy, it doesn't matter whether you're a Forex trader, stock trader, crypto trader. This analytics I'm giving you right now works for all form of trading. All right? Now, so anytime you open the chart, and you see the market, the price going this direction. Alright? Like in general, the price just moves upward. We say that this is called uptrend. This is uptrend. And why did we say that this is uptrend? How do you know? This is high. The price pushed up to this level, and then you thought this could be the highest of it. Then it came low just a little bit again, and then it pushed higher than it was before. It pushed higher. So we say here is higher high. This is higher high. This is high. Okay. And then the market still pushed high again. This is also higher high. I'll just write HH since you already know. And this is higher high. So each time it goes higher than it was before, we keep saying it's higher high. And now the price came low at this point. And now here it got even low again. But this is called higher low. Why is it called higher low? Although this is low, but it is higher than this low, alright? This is also higher low, and this is higher low also. And that moment you see the market going upwards, you usually hear things like the market is bullish. You hear things like bullish, buy, up, long, and so many other words. Now, the reason why the market is called bullish, which you might be wondering, is that the bull is an animal that attacks by pushing upwards, okay? That is just it. Now, when you open the chart and you see that the market is actually on the uptrend, what do you do? Let us know in the comment section. What do you think is the right thing to do when, in general, the market is on uptrend? When the market is on uptrend is actually the right time to buy. So, assuming the market took up here, came down and got up again, you already know it is easier to make profit when you go in the direction of the market, right? Yeah, it is actually easy to swim with the flow than to fight against it. So if you want to make profit, you simply place a buy when the market is on uptrend. Okay. And now, as for the exact time to make your entry is actually a different course on its own. So you understand this now, what the uptrend really is, okay? Don't mind, I had to mix those two hankies together just to wipe this properly. Okay, so now you understand what the uptrend is. When the market is buying bullish long, when it's uptrend, is the right time to place a buy. There are other things surrounding this that we get to know, but before then, let's see the next one, which is called downtrend. This is a downtrend. You get it? Yeah. So for this downtrend, one thing you should actually know is not just the trend. You should know why it is called downtrend. At what point did it become a downtrend? Now look at this market price. This is a low right here. You see, this is the lowest the market got to. That's why we say that this is low. Okay. And then this is high. This is the highest we thought the market could get. That's why we called it high. Okay. So it is actually from what happened from this low and high that we get to know the next destination of the market. All right. So from what we have here, we can now see where the trend of the market is going to. And now we thought this was high. So the market or the price got to this certain point again, and then it pulled back down. So we can say that this is lower high, and this is lower low. Why? This is a lower low. I don't know if you can see me. I think this is off the board a bit. Sorry, let me take it to the middle. Okay, I hope you get this. I'm not an artist. I do pause this and continue some of the time just so we don't take all day showing this, alright? And this is low. This is lower high. This is lower low. This is lower high. This is lower low. Why? Why is this? Now, ordinarily, this is high. This is the highest you can get. And then right here, this high is lower than this high. And this high is lower than this high. And we call it lower high. And this high is lower than this high, and we call it lower high. And then you see that in general, right here, the market is going downwards. And that's why we say that this is a downtrend, okay? So you see low, lower low, lower low, lower low, and so on. If you place a sell at a particular time, the price was in any of this place, and then, okay, let's say you placed a sell right here, and then the price got lower than the price you placed sell. That means you're making profit, because sell means you're saying the price will go downwards than what you bought at, okay? So if it goes down, you make profit, but if it goes higher, that means you're going to lose money. So that's why during the downtrend is the right time to place a sell. Now, there are things you should know whether you're buying or selling, okay? But before then, there is a time you should stay off the market. And that time is a time of consolidation. Can you see that? Yeah. Sorry, I've been a teacher for quite some time. My writing is not that smooth all the time. Consolidation is a time when you open the chart and you're seeing things like this. You get? Look here. Here there was a low and there was a high. So you'll be wondering if it could be an uptrend, but instead the price broke the structure and came all the way down here again and broke the low, okay? And then it goes all the way again and broke the high, and it did break the low again. This is a risky time to trade because with this movement, you never can tell when exactly you're to buy or sell, because except you are already a professional, you definitely lose money with this price fluctuations. All right. So this time, this market movement is called consolidation. The price keeps breaking the rules, because you should understand that Forex market, whether uptrend or downtrend, keeps to a certain rule. The certain rule that the Forex market keeps to is that price cannot break the uptrend or the downtrend except it's about to go the other way. Before I clean this off, I would like you to master this image, because right now I'm going to open my phone so that we see the market live and get in-depth knowledge of this, okay? But I hope you've gotten something. Ensure to drop a thumbs up to this video, and then make sure to share this video. That's a choice though, but if there are people, if you want to limit the number of people that do not know how to trade Forex, you can go ahead and share this video to as many people that you would like to help, okay? Alright, so look here. So we talked about the uptrend, alright? And then we talked about the consolidation. We talked about the downtrend. Okay. Now, in the higher time frames, I'm going to explain time frames to you. The higher time frames is when the market is fully open, when there are a lot of people in the market. And these higher time frames, at such time, the price will not break these structures on purpose. So at any point, this structure is broken. You get the structure right here. The structure is that this price is on uptrend. But at a point, instead of taking the next uptrend, the next candle formation here, instead of it going higher than the previous high, it rather got lower. So it actually broke the structure at this point. So at this point that it broke this structure, on higher time frames, this does not happen on purpose. This only happens if the price is about to reverse or it is consolidating. And at that moment it's consolidating, is not the right time to actually place a trade, okay? So always remember that on the higher time frames, number one is that the market or price will not break structure. Price will not break structure. Price will not break structure unless it intends to reverse. Okay? Unless it intends to reverse or consolidating. And then, dating. Who's dating here? Are you dating or consolidating? And then at such time when the price, and at the higher time frame also is when you make the most points. It's when you make the most money. All right. At the higher time frame, more money more made. Okay. More money made on higher time frame, because that's when the market has defined its direction. Okay. So you want to make sure, first of all, that you understand the uptrend, you understand the downtrend, you understand when the market is consolidating, and what you should do or not do as a beginner Forex trader. Okay. Now I would like to know, have you benefited from this course? And then this will continue depending on the interest that I see from this particular video, because this is actually the basic of trading, okay? There is actually a whole lot. This is the basic, just like you want to understand whether to buy or to sell, but there is still a whole lot about when to place a buy, like the best entry, the risk management, the take profit, the stop loss, and so much more. But then those things that we just saw, let us get onto the system, or I'll just take my phone so that we see it on the phone screen too. So I just opened the chart and let me zoom my phone screen so that we focus on seeing the uptrend. You can see that in general, this price action is going up. This is XAU USD on 5 minutes time frame. Yeah, as at this moment, I placed a buy because I saw slight opportunity here. Now on 5 minutes time frame, we see this is uptrend. I'm scrolling so that we check the 1 hour time frame too. On 1 hour time frame, this is also on uptrend. So the market has been going the upward direction. This price action of XAU USD has been bullish within many hours. Now we are seeing the downtrend too. So now that you see the downtrend, you know it, right? Yeah, so look right here. There was a massive downtrend from this axis as well. You can see that, right? Yeah, this is called downtrend. I hope you get this, so you can screen grab this, save it in your head, both the uptrend and the downtrend. Okay, now you see there was a moment. Look at what happened before the downtrend took over. You saw there is a consolidation right there. You see that, right? So this is exactly all that we have learned for today: downtrend, consolidation, uptrend. Now the next video is coming up. Remember to comment below how you like this video or not, or what you missed or didn't get. And remember, you can watch this over and over again just in case you need to master it perfectly before you get into trading.